Abundance Stock Advisors. Let's make money.
Hello and welcome to Abundance Stock Advisors. Abundance Stock Advisors is into the business of stock recommendations. We are a team of co-technical people and we believe that stock markets is a place to make a lot of money. No other markets in the world offers you better returns than the stock markets. However, there is a small twist to the story. As per the statistics, only 2% people make money in the stock markets. 98% of the people are losing money. Now the 98% of the people who are losing money are nothing but the retail investors like you and me. Now Abundance Stock Advisors was started to help the retail investors make money. Now if you see, the retail investor never makes money. He's always losing the money. Because to make money in the stock markets, you need the right knowledge and of course you need to be a disciplined investor. Now when I say right knowledge, we are going to give you the 10 mantras of the stock markets. These mantras will relieve all the secrets of the stock markets. It will clear all your concepts of the stock markets. No person on this earth would ever be able to fool you from today onwards, the moment you go through this entire session. So I am going to give you those 10 mantras of the stock markets in another 20 minutes. Be tuned, stay tuned. This session is beautiful and it's going to cover all the concepts and all the secrets of the stock markets. You are here to make money from today onwards.
Mantra 1.
Now there's a strange thing which is happening with all the retail investors in the stock markets. And I'm sure that you all will agree to it. Let's see what it is.
The moment he buys the stock falls. The moment he sells the stock rises. ऐसा कितने लोगों के साथ होता है? How many of us? Almost everybody.
This is the truth. This is happening with almost all the retail investors. Now let me tell you why this is happening with the retail investor. The only answer that I can think of is the psychology of the retail investor. Now let me explain how he invests money into the stock markets. Every retail investor follows 30 to 40 stocks in his entire lifetime. He will buy and sell only those particular stocks and he will keep on watching only those stocks. Now let's say one of the favorite stock of a retail investor is a company called as Big Cellular. Suppose the stock is trading at 50 rupees. Now this stock starts moving 50 to 60, 60 to 70, 70 to 80, 80 to 100 rupees. I would say this stock is in an uptrend. Our retail investor is just watching the stock in an uptrend. He has not bought the stock. Now the stock starts consolidating. 100 to 105, 105 to 100, 100 to 95, it keeps on consolidating. And one fine day, the stock starts falling. 100 to 90, 90 to 80, 80 to 70, 70 to 50 rupees now. Our retail investor had been watching this stock from 50 rupees to 100 rupees. And today, when the stock was in a downtrend, currently it is in a downtrend, he is seeing the stock again at 50 rupees. He will go and buy that stock at 50 rupees, assuming that this stock will again go back to 100 levels. The moment he buys the stock, the stock falls. 50 to 40, 40 to 30, 30 to 20 and 10 rupees. Because this stock is in a downtrend. He has bought it in a downtrend. Again at 10 rupees, this stock starts consolidating. 10 to 15, 15 to 8, 8, 9, 10 again. It starts consolidating maybe for say 6 months. One fine day, this stock again starts moving upwards. I would say the uptrend again has started. 10 to 20, 20 to 30, 30 to 50, bang. Our retail investor is again seeing the stock at 50 rupees. He has waited for 6 months. He did not get any profit. He was worried whether he would get his principal amount back. And today, he is seeing the stock at 50 rupees and he believes that let me just take out my principal back. I don't want money from the market. He sells the stock at 50 rupees. The moment he sells the stock at 50 rupees, this stock starts rising. 50 to 60, 60 to 80, 80 to 100 and maybe 150 levels. The moment he has sold it, this stock went back to 150 levels because this stock was in an uptrend again. This graph speaks only about two words. It speaks about trends. It speaks about patterns. Trends and patterns. We give you our first mantra here, a very important mantra to be followed in the stock markets.
Stocks follow patterns. Stocks follow trends. To make money, we have to be with the trend because the trend is our best friend.
Ideally, you should be buying in an uptrend and always selling in a downtrend. Now the trend keeps changing. Every bull rally is followed by a bear rally and every bear rally has to be followed by a bull rally. This is how the markets work. You just need to follow the trend. The trend keeps changing and every change in the trend brings fresh money making opportunities. This is very, very healthy for the markets. You be assured that our recommendations always follow the correct trend. You will always get a buy call in an uptrend and you will always get a sell call in a downtrend. You be assured about it.
Mantra 2.
Now in August 1997, Tata Steel was trading at 140 rupees levels. In December 2008, the stock came back to those levels, the 140 rupees levels. Can you believe this? In those 10 years, the business of the company might have grown at least 50 times. If not 50, at least 25 times. The business has grown 25 to 50 times, but the stock price is still at the same level today as it was trading 10 years back. Now, do you understand the relationship between the business of the company and its stock price movement in the stock markets? Don't even try to understand the relationship. Obviously, if the company is doing good business, more and more buyers would be interested in the stock of that company. Because of this, the demand increases. If the demand increases, the stock price starts moving upwards. One particular day, the same buyer, he is no more interested in the stock of that company. He goes and he sells that stock in the stock markets. Because of this selling, a huge supply comes into that particular stock, and because of this, the stock price starts falling. Is there any relationship between the stock price movement and the business of the company? Even today, the business of the company has remained unaffected amongst all the drama happening with its stock in the stock markets. We give you a very important mantra here.
The business of the company is in no way related to its stock price movement. Stock prices are governed by the rules of demand and supply. If there is demand, the stock moves up. If there is supply, the stock falls.
If you understand this, you understand the stock markets. Stock market are just governed by the laws of demand and supply. If the demand increases, the stock prices move up. If there's a more supply, the stock falls. They say, सत्य वही है जो आसानी से समझ आए. Now there are a lot of people who come and they tell me that I entered into a particular stock because the PE ratio of the stock was suitable. Let me tell you, unfortunately, if you're studying these ratios and you're putting your money in the stocks, you're absolutely wasting your time. You're absolutely wasting your time. You be assured that our recommendations will follow the correct demand and supply game. You will always get a buy call on heavy demands. You will always get a sell call on heavy supply. Be assured.